You are listening to Uranium Spotlight on Tuesday, December 17, 2024. Brought to you by PurePoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, PurePoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, more concerns over U.S. tariff threats. Niger escalates their uranium disputes, and Australia unveils their newest nuclear program. The recent downward trend in uranium's spot price, slipping from $77.25 a pound U3O8 2 weeks ago to $76.40 last Friday, has raised concerns amongst investors. This decline, following a recent drop from the high 80s, reflects seasonal trends and a cooling in spot market activity as 2024 winds down. Throughout December, spot market activity has been subdued, with many buyers finalizing 2024 procurement and moving into a holiday mindset. Last year's market saw year-end volatility driven by geopolitical events, but 2024 has been relatively quiet. Spot transactions have been limited and prices softened further due to lackluster demand, especially for prompt delivery at key locations like Cameco and Coverdine. On the supply side, several factors are influencing prices. Producers facing lower than expected output have increasingly relied on the spot market to cover shortfalls, providing some price support. However, available inventory from financial funds and traders has added downward pressure. Meanwhile, geopolitical risks such as Russia's reciprocal nuclear fuel export ban have yet to significantly impact the spot market, but are closely monitored. Looking ahead, the term market remains robust, with utilities focusing on securing longer-term contracts, some stretching into the 2030s. These contracts are likely to stabilize the market by absorbing surplus supply. As spot demand from utilities and financial players potentially picks up in early 2025, prices could firm up, with the current floor of around $75 providing strong support. The potential impact of U.S. President-elect Donald Trump's proposed 25% tariff on Canadian exports has uranium miners closely watching for what this could mean for the industry. While the Canadian government has suggested that critical minerals, including uranium, might be exempt from such tariffs, they've also indicated that they could respond with their own 25% export tariff on uranium, though only as a last resort. If enacted, these tariffs could further tighten an already constrained uranium market, likely driving up prices. The global uranium supply is already fractured due to geopolitical tensions, including the U.S.-Russia bans on uranium trade and China and Russia's increasing dominance over Kazakhstan's supply. With the U.S. relying on imports of over 99% of its uranium needs, fueling nearly 20% of the nation's electricity, further restricting access to Canadian uranium would strain its supply chain even more. However, there's reason to believe Trump's tariff threats might be posturing rather than policy. Known for his negotiation tactics, Trump has tweeted about the matter only sparingly, and no concrete proposals have been released detailing how these tariffs would be implemented. This raises the possibility that the threats are part of a broader strategy rather than a firm commitment. On the Canadian side, the government's potential response could exacerbate domestic political tensions. Saskatchewan, home of the majority of Canada's uranium production, has long been critical of Prime Minister Justin Trudeau's policies. Premier Scott Moe and Saskatchewan voters, along with much of resource-rich Western Canada, has already aligned against Trudeau's government. Imposing export tariffs on uranium could deepen these divisions, potentially driving more voters towards Conservative Party leader Pierre Poilievre. For Trudeau, the calculus may come down to shoring up support in vote-rich provinces like Ontario and Quebec, where protecting manufacturing industries from Trump's tariffs might outweigh the short-term costs to sectors like uranium mining. In any scenario, the uncertainty surrounding these tariffs, whether from Trump or as a retaliatory measure from Canada, adds a layer of volatility to uranium markets. For investors, these developments underscore the need to monitor geopolitical shifts closely, as they could significantly impact uranium supply, prices, and the equities tied to the sector. The situation in Niger continues to evolve, with significant implications for uranium markets and equities. Since the military junta took control in mid-2023, French uranium miner Orano and Canadian developer GoviEx have faced escalating challenges. Orano's last operational mine in Niger, Somaner, has effectively been seized by the government, and GoviEx is pursuing arbitration after its permit for a prospective mine was revoked. Following the coup, the junta sealed Niger's border with Benin, cutting off Orano's sole export route. While officially citing security concerns, the junta also ignored Orano's proposals for alternative export methods, including air transport. This blockade left Orano unable to deliver uranium to its international customers. Compounding the crisis, the junta took control of Orano's Imoran mine. Although production has been paused due to low uranium prices, Orano was working to restart operations. Niger's government claims Orano has been slow to develop the project, but Orano states it was nearing production. Now there is speculation that the junta may sell the mine to Turkish, Russian, or Chinese interests, potentially delaying any production for years. The Somamer mine, Orano's last operating project in Niger, has faced mounting issues since the coup. Export restrictions and sanctions on key supplies like sulfuric acid, a vital input for uranium extraction, have crippled operations. Additionally, Orano's local partner, which holds a 36% stake in the mine, has failed to pay its debts. This financial strain forced Orano to shut down the mine, prioritizing payroll over operational expenses. Despite Orano retaining a 63% ownership of Somamer, the junta has now taken unilateral control, operating the mine without consultation or authorization. Orano is reportedly considering international arbitration or legal action to address these developments. Meanwhile, GoviEx is actively pursuing arbitration over the junta's cancellation of its mining permit, which the company has called illegal. Both cases highlight the risks of operating in geopolitically unstable regions and the potential for prolonged disruptions. Investors should closely monitor these disputes, as the outcomes could significantly impact both companies and the broader uranium supply chain. Niger's actions not only undermine near-term production, but also raise questions about the country's long-term role in global uranium markets. Peter Dutton, leader of Australia's opposition Liberal National Coalition, has unveiled an ambitious $211 billion plan to build 7 nuclear reactors by 2050. This proposal hinges on overturning Australia's current ban on constructing nuclear reactors, a significant policy shift. The plan also seeks to expand uranium mining, which is currently restricted in 6 of Australia's 8 states. Even in the 2 states where mining is permitted, activity remains relatively limited. This stands in stark contrast to Australia's position as the holder of the world's largest uranium reserves, a resource largely untapped due to widespread opposition and stringent regulations. Dutton's coalition holds a slight lead in the polls ahead of Australia's federal election in May of 2025. If successful, this plan could mark a transformative moment for the country's nuclear and uranium industries, potentially boosting demand and providing long-term support for uranium prices. Investors in the uranium sector should watch this development closely, as it could open significant new opportunities for exploration and mining in one of the world's most resource-rich nations. Sprott Physical Uranium Trust, managed by Sprott Asset Management, has expanded its at-the-market equity program, or ATM program, allowing for the issuance of up to $1 billion US in units. This move involves adding new sales agents, including Cantor Fitzgerald Canada, Virtue Canada, BMO Capital Markets, and Canaccord Genuity. These agents will facilitate sales exclusively on Canadian markets such as the Toronto Stock Exchange at prevailing market prices. As a result, unit prices may vary based on market conditions. The Trust plans to use proceeds from this program to acquire additional physical uranium, aligning with its mandate to hold substantially all assets in uranium. It's worth noting that any decision on the volume and timing of unit sales rests solely with the Trust. The program operates under an amended and restated prospectus supplement dated December 6, 2024, which updates the short-form-based shelf prospectus issued earlier this year. A key update here is the approval for listing these units on both the New York Stock Exchange and the TSX, subject to meeting all relevant listing requirements. Sprott, renowned for its focus on precious metals and critical minerals, brings extensive expertise to the uranium space. With offices in Toronto, New York, and California, its commitment to specialized investment strategies continues to position it as a global leader in resource-focused investments.
And that concludes this year's Uranium Spotlight coverage. Thank you for joining us on this exciting journey through the world of uranium. Stay connected with us for more news, insights, and events as we kick off a brand new season starting Tuesday, January 7th, 2025. Until then, happy holidays. You've been listening to Uranium Spotlight Podcast, brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again on Tuesday, January 7th, 2025.